Hey everyone, my name's Andy. My channel is Finding Value. If you guys like this content, please subscribe, click the thumbs up button, and leave some comments. What I'm going to go over today is extremely important, the uranium to gold ratio. And keep in mind that this channel is about finding value, and we're using ratios to find value. The uranium to gold ratio is quite favorable. I'm going to share that in this video. So let's jump in. I think you'll be quite surprised at the valuation of uranium. So uranium to gold ratio. Ratio tells us value. If you don't know what a ratio is, it's comparing two items against each other over time. And those ratios, just to go a quick brief overview for everyone, a ratio basically tells us the supply-demand balance through a ratio and through the comparison to other things over time. And what happens is, and I'm going to give one example, you'll have a palladium to platinum ratio, and people will choose to go to one of those alternatives or substitutes and design things into their products to go towards the cheaper material. So that's what that ratio really is. It just tells us relative value, and the decisions in the market are going to go after whatever's the cheapest in the market for their products. So right now, we've got uranium. And I'm going to show you a uranium to gold ratio to see how cheap that is in comparison to history. Right now, we want to look at what is the valuation today. And the valuation today, uranium is roughly $30.50 a pound or so. We've got gold at around $1,900 an ounce. The ratio is about 62, which is extremely cheap. So this is what history looks like. And I put a star where 62 is roughly. And through history, market bottoms are definitely below 10. They look more like, this one looks extremely low. That could be like a 2 or a 3 at a bottom. But the thing to keep in mind is that we are extremely cheap. And uranium, when we're going to be in a bull market, and if we have energy scarcity, if we have inflation, I don't think this is going to stay at around 62. I think it's going to come drastically down. And typically when you look at these things, just don't look at the absolute values. What happens is you swing low, and this here would be a very rich ratio. You probably had an oversupply possibly, and then they swing all the way to the other side of the spectrum. Very rarely do they just swing, stop, and then come back. They usually swing from overvaluation all the way to undervaluation, all the way to overvaluation. Now we're all the way back, and the swing is getting bigger and bigger. So my guess is that we're going to even swing larger to the downside because we are so cheap to the upside, and this upside's been there it's probably going to be up there for a little while. So the potential price points, I'll give you kind of my estimates now that I know that kind of what it's done in the past. So if gold goes to $10,000 an ounce, call that our inflation gauge. The ratio compresses to a 1-to-6 ratio at market tops like uranium has in the past in the chart that we just saw. All market conditions are present for this to happen, and market balances in terms of supply-demand deficits have never been so out of whack in the future for uranium. So one potential price could potentially go to $1,667 per pound. And I write in there, could uranium be the ultimate bet? Another thing I want to throw on top of this is uranium is the highest energy return on energy invested fuel. And if you go into an energy scarce world into the future, and you have the highest quality energy in terms of your energy returns, this could fetch a huge premium. Far larger premium than it has in the past. Now, do I say it's going to go to that price? I don't know what the price is going to be. But what I'm going to tell you is that potentially could be, and that could even be low because we don't know. What if gold goes to $20,000 an ounce? If gold only goes to $5,000 an ounce, I don't think it will. I think it's going to go to $10,000 to $20,000 to $30,000 an ounce because The money printing and the real estate market is so out of whack that I think inflation is going to come and it's going to be pretty bad. And even if on a short-term basis we see a deflationary pressure from the Federal Reserve or from the economy, the Federal Reserve is still going to try to print their way out of this. We still have deficits in the housing market. Structurally, it will delay it if we have problems in the short term, but structurally, everything's on point to hold and keep accumulating. It'll just delay it. And I know the uranium sector's been decimated, guys. I understand. Everybody wants to know when. So we may have to exercise our patience here. But we know it is cheap as dirt. The ratio's cheap as dirt. What are you waiting for? We need to get into these companies. The energy return on energy invested is the highest of every fuel type. The world energy growth is exponential. It is going straight higher. Well, actually, it'd be going at faster rates higher if it's exponential. Energy creates all wealth in society. It is the most valuable commodity. Energy, that is. And obviously, uranium, if it has the highest energy return on energy invested, could potentially carry a large premium. It's clean and is green for most countries. You know, some countries, if they don't want uranium, whatever, they're going to lose out on the best fuel. So my question is, do you have your buy order in yet? And if you don't, why don't you? Because this stuff is dirt cheap. It's the highest quality fuel. And in an energy scarce world, all the nations in the world are going to be going after it if they need energy. Hydrogen, I hear a lot about hydrogen. Hydrogen is an energy transmitter. It's not an energy fuel source. Uranium is a fuel source and it's the highest quality. Do not overlook these attributes. They are extremely important. Also, when you go and you buy uranium or any of these things on my channel, buy them and cost average it in. You can buy in tranches. You can buy 25%, 25%, 25%, 25% into your positions. Now, the timing. We don't have to get this timing nuts on, all right? I know I do a lot of market updates. I know I do a lot of charting. I may be wrong some of the time because charting, that is a 60, 70% success rate. It's not 100%. We're trying to get the best prices. I get it. Uranium has pulled back. It's starting to come higher. Now's the time, I think, to get some shares. Why do I think the timing's pretty good for uranium? Again, market conditions. We've got the ratios are all telling it's cheap. Energy in itself is cheap. It may take some time for oil to turn around. Looks like it's turning around already. Doesn't mean this is going to be a straight line higher. We're going to have to go through short-term pullbacks. We're going to have to do all that. Understand the value here. That's going to allow you to continue to buy and hold on. This is going to be a long game play if you want to make very outsized returns. I'm not talking 2, 3, 400%. You start adding zeros on the end of that. 30,000%, 40,000. This is going to be big because what you have is what the characteristics of uranium has something that no other energy has, and that's that energy return on energy invested. And if you don't understand what that is, I will link it in the description below to explain what that is. But this could be one of the ultimate bets in our lifetime. And we have the opportunity right now to capitalize on it. So get your buy orders in, cost average in, spread it amongst some companies. Don't have to buy just one. If you're limited to only one, go ahead and pick it up. This is Finding Value. Hopefully you like this content. Please subscribe, and thanks for viewing.